Matt. How are you?
I'm good, thank you, Mark. How are you?
What does good mean, Matt?
I'm still trying to process all of this. It feels, it feels quite surreal sitting in a room with a few hundred people when they hear about our story. And I guess, it takes a long time, as we've discussed, to actually emotionally connect with what's happened over the last kind of year or two.
When did it become official for you that this has happened with iKhokha Nedbank?
1st of December last year.
And then we all went on holiday?
Correct.
That must have been a very different December compared to before.
Oh, it's quite different, yeah.
I mean, I suppose you might be laughing because you think you might have, I don't know, cocaine and strippers in New York or something. But no, I think more like mentally and emotionally, that is just an enormous amount to process.
Yeah, I mean, it is a huge amount to process because the deal itself took, I guess, from start to finish of the actual process, probably almost a 2-year journey for us. Not all of that with Nedbank, but more the build-up to get to that point. And then in the final few months post-announcement of the deal, huge amount of work that has to happen behind the scenes to, I guess, finalize that transaction, then huge fanfare around it all. And then everyone disappears for holiday, as do you. And then, it's just quite a lot to actually digest.
I guess that's what I would love to do in front of the live audience tonight and the many people that are watching this via live stream is we know the headline. So there's a lot to learn from you guys in terms of the sale and what it took. But I want to go back a step, if I may. What we did before this event, you and I jumped onto 2 Zoom/team calls, and I really got to understand the story uniquely. And as you and I spoke about, people are here to get as much value as possible. So I want to focus on some aspects. I want to speed along in some aspects. But I think as I was listening to you speak on these 2 calls, it was so abundantly clear to me that people just don't appreciate what it takes to truly build a business of any sort, whether you sell it or not, to then get to the point of 350 plus staff. And then, like you say, to actually exit is something else. If I may, I took 5 or 6 core pillars out of our chat. Mental resilience, what people don't understand about the founder effort. I really want to talk about the things you fucked up. I want to talk about the things that were really hard because I think we don't give that enough credence. I want to talk about organizational design and scale, because clearly when you've got that number of people and you're doing that level of turnover, it's not Matt, Ramsey, Steph in the background with the remote controls and some other bits and pieces. Just before we get there, would you help us just understand, before you started iKhokha, just for the people here to get a sense of who are you, where did you grow up, maybe 3 to 4 minutes of you just setting a scene of what your younger years looked like and what led up to the starting of iKhokha.
Sure. I grew up very proudly in KZN. There are still some businesses that do grow in KZN. In a very entrepreneurial home. So my father came from quite humble beginnings on the south coast, a place called Ramsgate, very close to Margate, which a lot of Joburg people will know. He ended up getting bursaries to kind of fund his first year of university. His parents couldn't afford to send him to varsity. Did his degree, got a bursary to do a master's, got a bursary to do a PhD in electronic engineering overseas, and then came back and started his own business. So I grew up in a very entrepreneurial home, and I guess in the early stages of my father building his business, so getting to watch, I guess, what went into building your own business and the highs and lows of that. Started off, I guess in a world that was, I guess, very humble. And then as my father kind of had some success with this business, was able to, I guess, go to some really good schools in KZN, very blessed to do so. School called Highbury and Hillcrest, and then to Hilton for high school, which was an awesome experience. A few Hilton old boys here tonight, so I haven't seen in a few decades. So thanks to them for coming out. And then after that, I think I always had the ambition to be an entrepreneur. I wanted to do my own thing. did a gap year in London, which I loved. Got dragged home to come and do a degree by my father, and decided to do a BA because it seemed fairly easy. In hindsight, probably wasn't the best degree to do. And whilst I was studying that degree, I had a lot of free time on my hands because it was a BA in media and communications. And one of my best friends, his brother owned the premium nightclub in Durban at the time, which was a place called Tilt Nightclub. It was a house nightclub, very progressive institution, and started working there, and eventually convinced my father to lend me some money to buy into this nightclub whilst completing my degree, which I did manage to do, and was involved in that nightclub for a few years. We then sold the nightclub. My dad had exited a business of his and was looking at one or two technology products, one from Canada, one from Germany that he wanted to represent in South Africa, and I decided to partner with him on that journey and see if technology was for me. And in parallel to that, after having sold the nightclub, I played a lot of online poker and physical poker to basically fund my life. And then, I subscribed to Fortune magazine and Time magazine, really just from an inspiration perspective to understand what was happening in, first world countries and what were the real tech trends that were getting scale, as I tried to figure out what my kind of big idea was. And then came across an article about a guy called Jack Dorsey, who founded Twitter, and he also founded a business called Square. And Square was, I guess, a business similar to iKhokha that was using the power of mobile technology to enable SMEs to start taking card payments in the States. And having had a very poor experience with traditional banks and a card machine through the nightclub, kind of those two things came together to create that aha moment.
I have interviewed a lot of founders that have done quite well, and I always find these invisible dots that only connect much later. 3 that stood out for me, and because I equally come from a background of running nightclub events. Do you think there's something to this? Why I say that seriously is that, I'm sure you'll agree with me, but I'd love to hear your thoughts. Running nightclub events is like an informal MBA in business. You're learning all manner of things, marketing, sales, promotion, you name it. Like, it teaches you a lot that I'm sure must have come in handy in patches. I would love to hear how that dot connects to the poker. And there was one thing that stuck out that you wouldn't have mentioned here, but I just remember you got very sick in high school. These are 3 dots that clearly had a massive impact. Could you speak to them?
Yeah, maybe let me do the nightclub and then I'll do the sick in high school piece second. But yeah, I agree with you. I think that it's a baptism of fire being in a nightclub, especially when you're in your early 20s and having to conflict manage big drunk humans with big egos late at night, and sales and marketing. But I think as importantly is you learn a lot about creating an experience for people, and things like lighting and mood and all of, I guess, the magic formula of making people enjoy an experience, which I think translates to a lot of different businesses as well, and negotiation, because it's a very Wild Westy type business culture. So I think that, it is a crash course. It was definitely for me, and I learned some hard lessons and how not to run a business in many respects from that nightclub experience. And then, coming back to...
I just want to tell you, I went to Tilt a few times, and my friends told me I had a great time. So thank you. My younger years. Sorry, not to interrupt you from high school.
Lots of people with big blank spots from their nights at Tilt, including many of my friends. The high school piece. So went to Hilton, as I said, and towards the end of my standard 7, my grade 9 year, I got sick with an illness called myalgic encephalitis, or chronic fatigue syndrome. At the time, it wasn't a very well known disease, especially not in South Africa. Ended up missing a year of school, and it was an illness that didn't have like a magic pill to be cured. So I went through, I guess, a very hard time of dealing with this illness and not having a clear endpoint of, okay, if you're sick for a week or 2 weeks, this thing gets better. Some people have it for years, decades. So it was quite a big thing, and obviously mentally took me to a very dark place. But yeah, I guess through building good mental health habits, through meditation, through good diets, and through, I guess, mental resilience, slowly, kind of week by week, got incrementally better. And at the end of a year of being away from school, went to see the doctor. He said, look, you can go back to school next year, but like, you can't go to boarding school. You won't be able to cope. And I said, no, I'm going to go back to boarding school, which I did. And then I got faced with the choice of, by the headmaster, we'll push you into the year, so you stay with your peers that you've done 2 years of school with, or you can stay back a year. It's your decision, because I'd had good grades before I got sick. And I had to make a very tough decision to be like, well, I can stay with my peers, which is obviously what I wanted to do, but I'm going to have to now reacclimatize into boarding school and catch up a year's worth of work, and I'm probably going to end up having a relapse. It'll be too much. So let me make a very hard decision and stay back a year while all my peers kind of were the year above me. But yeah, I think that's through that through that illness and overcoming that illness, it built a lot of mental resilience, which almost became like muscle memory, which served me very well in entrepreneurship, kind of later on.
Because all of these things could look like quite hectic in the moment, but they actually serve you so well later. And I guess it's a lesson for anybody who has their own business, which, as a matter of interest in the room, just by show of hands, how many of you do have your own business here? Okay, so I would say about half the room. Okay, so we're here because it's been 14 years, and we now know at least how the story plays out for iKhokha up till now. But I would love to just get a sense of the early days. I mean, I know from equally having some nightclub events, and we had this online fragrance store that turned into a physical store. We had physical payment, I actually think with Nedbank, but with all of them, they were all shocking, to be honest with you. They all took 5 to 7% of your margin, which is nuts. There were all hosts of issues. It's easy to look now between you and some of your competitors and see how much it's changed. I mean, I can just view on my phone what this bar has done between all of these. It's incredible. But what the fuck were you thinking trying to go into this space 14 years ago? And just run me through the early days, because it was a very different landscape, clearly.
Yeah, I mean, I put it down to the exuberance of youth. Yeah, we're just very... I guess we didn't know what we didn't know, and we were young and ambitious, and we thought that the system, the way it was set up, was a bit broken, and that the way that banks thought about small business owners was like massively ineffective, and therefore there was a gap. And with the growth of mobile technology and smartphone penetration in South Africa, both on iPhone and Android, there was a change in the way people were interacting with technology, which we saw happening. And then seeing, I guess, a reference point from America where another guy, also like a fairly young guy, had some success with this, gave us enough confidence to think we could have a crack at it. And then finally, my father had this background in security technologies, building hardware. And we went to him and said, Dad, do you think we could build a card machine? And he famously said to Ramsey and I, yeah, it'll be a piece of cake, which it definitely was not by any stretch of the imagination. But yeah, I think it was just young, ambitious, didn't know what we didn't know. And we thought that things could be done differently. We wanted to prove that people that didn't come from the traditional corporate system could come up with a better way of building a business.
So as I see it, and obviously because I interviewed you, I could see 3 immediate problems. You want to start iKhokha, cool. You have to build the actual card machine. You got your dad, but you still got to actually build this thing, get it certified, etc. 2, you got to get the money to do that, because I assume it's not cheap. And then 3, that's the physical component. There is the other side of it, which is you somehow have to get these, either the banks or whoever it may be. I don't even know how you figured out who to go to and where to go, but you had to go get some of these financial institutions to to give you a hand in. So just run me through those three things: funding, the physical card system, and the getting into the banks.
Yeah, I mean, the funding piece was, I just really Googled how do people raise funding for businesses? What do you need to raise funding? Oh, you need a 3-year business plan. What is a 3-year business plan? And then slowly started to build up a little bit of a picture of what we needed. And then I thought, okay, well, what people do we need in this business to actually run the business, having never built a technology business previously? And then I went to Square's website, looked at what were the roles they were hiring, Googled what those roles actually meant, like what these people were doing. And then, I built a 3-year plan, used some of my limited BA media and communications training in putting together a marketing plan. And I guess an ask from a funding perspective. And then the hardware piece was very challenging because it was really bleeding edge technology. And even internationally, the labs that we were working with were kind of figuring it out as they went along. So it was such a new space. So it was just, a lot of really hard work, back and forth, slowly building context and knowledge and trying to find people with who could help us upskill. So, finding international consultants or documents, reading these technical documents that were made your nose bleed from start to finish and building that context. And then the third piece, the banks, was quite a tough one in South Africa because the model that Square used was an aggregation model. So ultimately they had a bank who sponsored them, but they did everything. They made this great, very slick experience for SMEs. And in South Africa, this aggregation model at the time was kind of like a swear word. None of the banks wanted to open themselves up to the risk of having somebody else manage a lot of this functionality and these flow of funds. And went to every single bank, every head of acquiring that there was across all the banks. We started with Capitec because we thought they would be the most progressive bank, and they battered us on day one. And slowly went to all the other big banks, Standard Bank, Nedbank, FNB, and finally ABSA. And in the last big bank, ABSA, we were lucky enough, serendipitous enough to find a guy called Mark Anderson, who was the head of acquiring, and for some reason he took a liking to us and said he'd give us a bit of a gap. And then coming back to the funding piece around, I guess now we had this business plan, we had a prototype that we could show our investors that was really a 3D rendered card machine that plugged into an old iPhone with those like the broad connector. And through another Hilton boy who had raised capital, got introduced to investors. And to go into that investment pitch, I watched the movie The Facebook. There's some really good negotiation scenes in that movie, and tried to take a little bit of that American bolshiness into a negotiation with our first investors, and the first people we spoke to very luckily ended up giving us capital, and that was the money we used to certify the devices and kind of start the business.
Because on one end, your timing is really good. There aren't that many people doing this besides the banks. That's also what makes your timing really poor. It's not as open as it is today. What makes it really good is that you have your dad and his technical experience from an engineering background, so he can help you certify the hardware. But as fate would have it, that process is a shitstorm on its own account. And unbeknownst to you in the background, the other companies abroad are creating these technologies. So you're spending all this money. You're using the prototype to go get the funding and to get the banks in. But then the certification process, just run me through that one final. I don't want to get caught too much detail, but it's important that people understand, like, it wasn't a straight line for you, because it could look like I built a prototype, I went to get funding, and then ABSA said yes. But it's not like that.
Yeah, two key things happened. The first was that to actually certify the device took a really long period of time because it's just such a complex process. And as Mark was saying, obviously we saw an opportunity to have this device that would work with the phone, as did multiple other people internationally. So whilst we went through that kind of certification process, bigger global businesses that built hardware were building out devices that we could use. So by the time we certified our device, there were third-party OEM devices that competitors could just go and buy and launch in markets. And the second thing that created, two other things that created complexity. The one was that when we built the business plan and the money to certify the device, the rand was at 8 rand to the dollar. By the time we certified the device, the rand was at 12 rand 50 to the dollar, and obviously going sideways. So that had big implications. And then as we certified the device, Apple, because it was a plug-in unit to an Apple phone, an iPhone, Apple changed the connector of the iPhone. So yeah, lots of I guess hardware itself. People say hardware is hard, and we realized that that it was a big drag on our business.
Because you had spent all this, you had used a large portion of your runway to effectively work on the hardware, and by the time it was certified, you didn't need that hardware, and other people out there were doing a better job that you could just quote unquote pick it off the shelf.
And the money you were supposed to spend on marketing, you'd spent on the difference from the rand being 8 rands, 12 rands the dollar. So you had even less runway than you thought you would have.
So that gives you guys just a bit of a sense of where it was in the early days. What I'd like to do is take maybe 10 to 15 minutes more. I'd love for you to share exactly some of these hard parts. Because again, we look at iKhokha today, 350 plus staff just sold. But you've just managed to solve the hardware piece, and then there's other hardware that's probably better. You're running out of money. Give me some highlights of those early days. I mean, I'm sure there must be many times where you were just like, to hell with this. I think we might close, or it's just too hard.
Yeah, I mean, I think there was many moments like that, and as I said to Mark separately, my challenge was that first of all, we had people that obviously were employed that now you're responsible for as a business owner. You those people's livelihoods, their families, you take quite personally. So I think that weight and that responsibility was a key motivator to try succeed. And secondly, I had no other corporate experience or work experience. I'd gone from a nightclub owner to a poker player to building this business. So if it failed, I would literally be like back at square one with a CV that no one would probably hire me for. So I kind of realized that it was all or nothing, and we had to make it work. And I guess many days where it didn't, all the data would say this business is going to fail. People would be like, you guys should just pack it in. And even our early investors, there was a point in time where we had a funding round that we were about to close, very big, reputable funder in South Africa. Would have been a great deal for us, good capital into the business. They're coming down on Friday afternoon. They're coming down on Monday to kind of finalize the deal with us. And on Friday afternoon, we got a phone call to say, listen, guys, we're going to have to pull the plug on the deal. There's some internal issues on their side whereby they can't do this transaction. And we went from Friday afternoon, everyone's super excited, to Monday morning, call with shareholders saying, you've got a month to halve your OPEX. Otherwise, we're not going to give you any more funding. And we had to then go basically fly down to Cape Town, retrench our whole office in Cape Town the next day, which was obviously like a really hard thing to do. Great people who were super invested in the business, had done a great job, had done nothing wrong. But it was the only way we could survive was basically by closing that office and consolidating in KZN and selling off furniture. And then we had month-to-month funding. So I said, we'll give you a month's funding. We'll see how you do at the end of this month. If it goes well, we'll give you funding for another month, which is obviously a super tough place to be when you've got staff and you're trying to build a business. And that carried on for north of probably a year. And eventually I said to the guys, like, I can't do this anymore. You need to commit and give us kind of more runway. We're slowly getting things together. And this is obviously very early days in the business. And then, which, they eventually did do, but I would wake up, often middle of the night, kind of like semi-panic attacks, and just carry on working to try to figure out, how you get to the other side of the survival kind of pit. So, yeah, it was super tough, and for a long time, you work 6 days a week, very long days. But we pushed through it, and ultimately things kind of started to fall into place for us.
It begs the question, Matt, around funding, getting finance, or giving away equity for money. You guys, I guess, I'm assuming that you had no choice, but from the very beginning, because of the size of this machine, you pretty much either had to go get funding or you would never get off the ground.
100%.
If that's the reason you did that, cool, then just talk to me a little bit about how you approached, because there's a trade-off, isn't there? When you give away equity for money, you kind of are beholden to these people. Just talk me through that process a little bit.
Yeah, I mean, I think it's different for every business, and different business models need capital at different points in time. The type of business model that we had, you have this big upfront capital intensive business that needs capital to buy devices, certify them, build your team, build marketing, grow your revenue, and eventually at some point there's an inflection point where the business starts to scale. Other businesses are different, but there is a big trade-off. I think, the people that you take funding from, you become, married to for the foreseeable future. And it changes the dynamic from an economics perspective where, often in businesses like ours and other big tech businesses, the founders end up in a minority position in these businesses. But at the same time, if you pick the right investors, they can challenge you and push you in certain spots, but make you better, and they can stick with you through hard times as well. And we've been fortunate that in different parts of our business, we had, two very good investors. One being a business that now is called CrossFin in the early days, who stayed with us from seed capital right through to exit, and an international business called Apis, who came with big, global thinking, were comfortable with variance in businesses as long as you were doing the right things, and gave us more capital to grow the business so that we could close the gap on our competitors. And without those two investors, the business would never have got to where it is. But yeah, it's an interesting relationship, and when you building credibility, it's tough. Once you've built credibility and trust and you've been through hardships together, then it's actually a very positive relationship to have.
What I want to do, I'm just on my phone because I'm looking at some of the questions. So I think I'm going to turn my attention to some questions with some quick fire answers, if I may. So Zosuliwe asks, do venture capitalists expect 100% success in all their ventures? I assume not. What would have happened if you had failed with your partners, do you think?
Yeah. I mean, I think they expect 1 out of 10 to succeed. I think that's the ratio. That's your median. Obviously, better venture capital firms will have a slightly higher success rate than that. But yeah, I think they back multiple horses in the race, and they're well aware that many of them will fail. So I think that's something to be aware of.
Anonymous says, iKhokha, oh goodness. Anonymous, there's so many questions coming in now, which is they're disappearing from give me 1 second. It's because now people are asking so many questions. Wow. I'm not joking. I think 4,000. Okay. Anonymous, iKhokha has rich transaction data. How do you see AI using that data to give SMEs predictive insights, livestock optimization, cash flow forecasting, etc.?
We're figuring that out. I mean, we're trying to, as a leadership team, I guess, dive a lot deeper into AI this year. We don't have the answers yet, but we definitely think that it's something we need to kind of be ahead of the curve on. And there's use cases to help SMEs with AI that we're starting to work on.
JC, who were the biggest doubters in the beginning? What do they say now?
Everyone. There were a lot of people in big banks who were doubters. There were people in entrenched payments businesses who were doubters. There were lots of people in Cape Town who were doubters as well, that you could build a business from KZN. They were very skeptical about that. I mean, in the beginning, to be honest, 99 out of 100 people were doubters. It was the popular opinion. And we were also up against, a very well-funded competitor in Yoko. and there was a patch where lots of people had the view that it was kind of a winner-takes-all type of market. We always thought that there was space for multiple players to grow the ecosystem, because a lot of SMEs in South Africa, and people want choice, and that's kind of how it has worked out in the end. But yeah, lots of doubters.
A good question. Peter asks, how does iKhokha differentiate itself now as a market disruptor since it's been acquired by Nedbank?
Yeah, I mean, that's something we have to figure out over the next few years. As it stands, and part of the transaction rationale from Nedbank's side is not to mess with the kind of the working formula. So iKhokha will continue on as a standalone entity under its own brand, servicing businesses irrespective of who they bank with, but then working closely with Nedbank and I guess leveraging some of the capabilities that they have that can help us provide an even better offering to SMEs, and likewise help us expand into other markets where they have presence and licensing. So I think they're very mature in their thinking about not wanting to bog us down with, I guess, a lot of the corporate stuff that could slow the business down, and rather support us, from the outside and partner on things that make sense to partner on.
Rudolph asks, have you tracked Yoko throughout your journey? I assume yes.
Yes,
And what do you
over Yoko.
What do you say your edge is over? What is your edge in your mind over Yoko?
Yeah, I mean, I think the thing about Yoko is, I think it's a really good company that has also helped kind of evolve the SME ecosystem in South Africa. And I think having competition is good. Having, someone that is raising the bar and we in the race to launch new features and provide a better solution for SMEs is good for both businesses and, more broadly for the ecosystem. It was my job, I guess, to understand as much as I could about the fundamentals of Yoko, what their strategy is, what I think their next moves are going to be. But at the same time, you have to be very careful not to spend too much time worrying about what your competitor's doing versus just executing your own plan. And in our space, there's a lot of noise, as there are in many spaces. So often we say to the team, guys, just don't worry about the noise. Don't worry about what they're doing. If we can figure out how to service SMEs more effectively than anyone else, and if we can understand the pain points of SMEs better than anyone else, then ultimately we're going to succeed. And it's not going to be, a one horse wins the whole market type affair. In terms of what differentiates us, I think Yoko, their founding team had good experience in raising capital, coming from very different backgrounds to us, probably far more polished in some ways. And we had to build a much leaner business with less capital, which is both hard, but at the same time can be, it can actually be something that gives you a lot of differentiation when the going gets tough. So I think we've built a very lean business. Culturally, I think very involved in the business still, as operators. And I think the culture of our business is quite different in terms of how it's been founded, the ethos of the founders, etc. From a product perspective, we focus a lot on service. I think and we're the number one rated brand on Hello Pizza in our space. We've also looked at kind of the lower LSM, SME market and what do entrepreneurs need at the grassroots levels. And our offerings have differentiated slightly in that regard. There's a bunch of product features we have that they don't have. And adversely, there's some features that they have that we don't have because they've kind of gone more upstream into, that kind of the Cape Town market in some regards. But I think there's also overlap and good business as well.
We have both of you guys here. It's been interesting to track just even on my own accord, and we've had this even in Cape Town. One of the things that drew us originally with setting up this thing is that they've got table or counter by Yoko.
Yeah.
So that integration was interesting. And just seeing the differences, like the biggest lesson for me is that it doesn't have to be a winner takes all, quite literally.
Yeah.
honestly using both. Like I can see why some people would use one. I can completely see why other people would use other, and it's really good. I assume you two really have driven each other. If there was no Yoko, you wouldn't be as driven, and vice versa.
Yeah, exactly. And I mean, Katlego, who was the CEO of Yoko, recently kind of stepped down the end of last year. We've had we more recently had conversations, I guess, as the businesses have gotten older and matured, and there's consolidation in the space. But we both acknowledge that, iKhokha having Yoko and Yoko having iKhokha adversely has been good for both businesses and good for the ecosystem, more broadly. So, yeah,
There are two.
it's good.
There's like a repeating question, as you can well imagine, and I've quizzed you on this a lot. For example, Zane asks, but I see about 10 other people asking the same question, which is really, we've seen South African startups get acquired by big corporates and quickly become irrelevant, die, or lose their edge.
Yes.
You give some examples. Nedbank have said they'll leave you alone and you can operate independently, but how are you planning to uphold that edge?
Yeah, I mean, it is a common question, and I guess there's lots of examples of businesses that have been acquired by big corporates and ultimately it hasn't worked. So I acknowledge that. I guess it's our job. Well, first of all, as a CEO and as a kind of the co-founder, staying on for the next few years alongside the entire exec team of iKhokha, I think is key. Retaining that leadership team and that culture is the first step in making sure that we continue to operate as we do. And secondly, Nedbank's paid a considerable price for this business. It's a big investment. It's a big punt for them. They want to be kind of forward thinking. They're speaking about wanting to almost position more as a challenger brand in some of these spaces. And in the SME space, that's very aligned with where iKhokha sits. And it's quite a low ego culture, which is very unusual for banks, whereby if it makes sense for our brand to service certain parts of the market, and the market actually resonates with our brand, then they're fully supportive of kind of pushing our brand into those segments. So it's very early days, but I think the fact that it remains a standalone business with its own culture, its own strategy, and is almost enabled by the Nedbank leadership team to continue to grow into the spaces where we've succeeded and into other markets. The initial signs are promising, but it's our job and it's my job over the next few years to make sure that we don't become one of those, negative stories. And I'm not saying all banks have big egos. There's one or two other banks with great people as well we have good relationships with, but it is something that you can see in big banks. But yeah, with Nedbank, I think that there's an ethos where they have a maturity about it, and they, I guess, can see the value we add and how we complement each other. And it's our job to unlock that without losing that edge.
There's a question here that represents a lot of people asking a similar thing, which is like, when you got going in the early days, I would love for you to just run me through how you acquired customers early on. And the second part of that question is, being that you're so much bigger now, how do you today still stay connected to your users' frustration, and how do you be on the ground with that?
Yeah, I think that's a really good question. I mean, the first part, how did we acquire customers in the beginning? It was difficult. And a lot of it was first of all, starting with almost friends and family and people that that knew us or trusted us, would give us an opportunity, and then slowly built, I guess, credibility with those people and started to expand. But we also focused on creating a custom experience that removed a lot of the friction that existed in acquiring a product like ours. We try to think of it almost like buying a pair of shoes online. Very easy to do on Superbalist or other sites. Buying a card machine should be the same kind of seamless experience. So fixation on that onboarding and customer acquisition journey was key. And then as we built trust, reinforcing that trust of testimonials, of Hello Pizza reviews, Google reviews that came through in our marketing. And then in terms of as the business scales and you get bigger, how do you not, I guess, end up sitting in the ivory tower of air-conditioned boardrooms removed from your customers? I think it's difficult. It's something you have to fight against as a business grows. There's a few things we do. I think the one is that We're very close to the customer data and feedback, and it's very visible across our business. So if there are customer complaints, it's visible throughout the business to everyone. I will often get merchants who somehow get my contact details if they have an issue, and I'll dig into what happened, make sure that is resolved for that merchant. If it's Saturday at 10 o'clock at night or Sunday at 9 in the morning. And I think you have to have that mentality that it's like your first customer. And then when other people see that in your business from the leadership team, that culture filters down. And yeah, I guess it's also like we do a lot of training, we do a lot of quality assessments within our teams to listen to how people are speaking to customers. And then we spend time in the field as well. We actually have live events. We've built 15 iKhokha stores now, and a lot of them are in the township economy, physical events. We bring merchants in. We understand what their pain points are. We help educate them, not just about our offering, but about how to run and kind of grow and succeed in their businesses. And we just continuously try and, I guess, close that gap between us and the customer. And it's always something you can do better. But I think we do a better job than most, and there's still room for improvements.
Believe it or not, there's a whole bunch of questions that a few of you have asked for me. I'm just telling you that I'm not going to answer the questions for Mark because we're here to chat to Matt. Nadine asks an interesting one. Was it always the plan for you guys to exit? How long did you prepare the business for exit before you put it on the market?
Yeah, I mean, I think it was always probably the plan to build a business to a certain point of scale and exit. In terms of what the timeline was of what that looked like originally, I think we thought it would take 3 years to build the business. Turns out it took 14. But yeah, I think with having private equity and venture capital investors, they have a return kind of threshold in some of these structures. So, example, in one of our private equity investors, they have a fund that they invest in us via, and that fund has a 10-year lifespan. So basically, from the moment they've taken capital from people, they've got 10 years before they have to return that capital. Let's say they invest in iKhokha year 3 of the fund. That gives us kind of 7 years worth of runway until that exit event happens. And with our exit, we knew when the exit date was for kind of 2 of our big private equity shareholders in the business. And it just made sense to align the exit event with their exit because it gave us kind of collective leverage and bargaining power to do it together. So yeah, we worked towards it for about 2 years. I think the other thing is that with private equity fundings linked to these funds is once funds are deployed from a fund, you can't get additional capital from those shareholders. So you capital constrained to grow further beyond that. You have to manage your own growth from your own runway of cash that you're generating in the business, which is what we have done over the last few years. But ultimately, to go to other markets, to take on other opportunities, you can't do that because they don't have the mandate to do so. So we also realized that we needed to bring in a strategic partner who wasn't just going to bring capital, but was going to help future-proof the business. And we saw kind of convergence between payments and banking, where SMEs don't want to have someone they get a loan from, someone they have a card machine with, someone they bank with, someone they do accounting with, someone they do insurance with. They probably just want to have one provider that they trust who can do all of those things for them. And for us, that's really what we're trying to build now. We move beyond the card payment physical device piece, really building an operating system that SMEs can use to run their business on a daily basis. And a key part of that for us is the banking piece. And obviously, having a banking partner with a big balance sheet that has banking licensing, that has know-how that we don't have, that has distribution that's complementary to us, that has access into other markets was something we felt we needed to get to the next level. So it was a combination of timing of private equity investors needing to exit, to, I guess, people who'd been there for a long time wanting to see that liquidity event take place. Some people, 14 years is a long time to grow a business. We're kind of keen to either retire or take a break. And then the third piece was the strategic element of we actually needed to bring in new shareholders to take the business on its next growth cycle.
Bekhosi rather cheekily asks, with all the funding that iKhokha received in the past, what is the net gain of the 1.65 billion for you and other funders? But I think it is interesting, right? And why I asked it is because the headline is that you've sold for 1.65.
Yes.
There's a lot of funding that's happened in play. And how do you balance like you being incentivized enough to want to carry on? So you need to get something out of it, but you don't walk away with 1.65, obviously. Just run us through that.
Yeah, I mean, I think that it's actually a very good question, because I think there's a misunderstanding where we see, like you see businesses in this startup scale-up space raising big funding rounds, and everyone thinks that raising big funding rounds is a sign of success, that these businesses have made it. In reality, sometimes it is a good thing, and sometimes it's not actually a good thing. What happens with a lot of these, especially in the last few years as the market has changed, businesses will raise big amounts of capital at very high valuations, but what they're actually doing is they are taking money. So let's say, let me use an example. Someone raises money at a $200 million valuation. Everyone thinks, wow, that business is worth $200 million, amazing. In reality, in a lot of those transactions, what happens in the background is the funders who are putting the money into the business will say, we think 200 million is a stretch for your valuation, but if you give us future commitments that basically anything less than double that money or triple that money, if you sold the business, we get the majority of the proceeds. So there's kind of these future guarantees that are built into these funding rounds that can actually become a massive weight and inhibitor and in many cases actually disrupt or ruin some of these businesses' future success. But on the outside, everyone thinks, wow, it's amazing. These people have raised so much money. Their valuation's so high. Their valuation is high when they've sold a small part of their business. To find someone who wants to buy the whole business for 3 times that in the South African markets in 2 years' time, when the market cycle has shifted, becomes a really big problem. And then you find businesses who are stuck. You can't raise more capital. They can't sell because the valuation's too high, and they'll kind of wipe out their whole capital table. We, on the other hand, were very strategic in how and when we took capital. We did it privately. We didn't make a big public noise. We raised quite a big funding round about 3 years ago. Never did any PR about it. We never spoke about what our valuation was at the point in time. We just put our heads down. We knew we were going to use that money to do the right things in the business, and on terms that created no downside risk or obligation for shareholders, just straight vanilla capital. So in the long term, we've raised much less money than our peers, but on a relative valuation perspective, the return for our investors is far greater and a healthier return. So yeah, it's just an important thing to note, and especially now when the cycle's changed, where markets are a lot tougher, valuations have come down, and businesses who raised at the peak of the last cycle are actually, some of them, in hard spots. From the iKhokha perspective, the shareholders that have put money into business all made healthy returns versus the points that they came into the business.
But even for the likes of you net out cool, but then what people don't see is the taxes and you know what I mean? So it looks glamorous. I'm not saying you've not done well.
Yes.
It's just that, people have this idea.
Yes, people also think that myself and Ramsey kind of split 1.65 billion rand. Who chilling on our mega yachts. I wish that was the case, but to build businesses of this size, you end up giving up a lot of equity, and ultimately, as you say, there's a whole bunch of other stuff that's kind of linked to it.
Guys, there were so many questions here. I think there's 17 pages of questions, and it's quite difficult to get through, and we're kind of nearing an end. There's some personal stuff, and I want to really tie it into what I took out of you. There are 2 that I think are interesting here. Anton asked, do you meditate? If so, did it make you a better businessman? And if so, how?
Okay. My wife's listening to this, so I have to be honest. I do meditate. I haven't been very good at meditating in the last 6 months, but in the probably 4 years prior to that, I did a decent job, and it's on my goals for 2026. But there's a bunch of, some of the other things that I think have been super helpful. I think building a business is super stressful, and it takes a lot out of you. And I have the same conversation with my exec team who pushes themselves really hard. You have to have a balance of trying to exercise a few times a week, try and do meditation if you can. Multiple members of our exec team go to consistent therapy, which everyone finds super helpful. We've had life coaches we give to people in the business, to give them support. So I think lots of that stuff is important. The other things that I also do, which we've spoken about, is visualization, or trying to actually bring to life the things that you believe you can achieve, and also writing down really big ambitious goals that at the time you write them down, people say it's impossible, you're never going to achieve those. And I've done that consistently, and when I look back on those things 2-3 years later, I've actually ticked the box on a bunch of those. And I think that visualizing like this big audacious goal and actually making it real, how you feel in that moment. I spoke to you about, we had these really shitty little offices, like one toilet for 30 people and like a very poor aircon, wanted to get nice offices. And we went to this place, beautiful offices, we couldn't afford them. It was just a slab of concrete at the time. And I would go away and actually visualize myself in that space with a team of people giving a speech saying, welcome to new offices, we've made it, we're here, this is how cool it is, and people being super happy about that. And I would think about that, I would actually play that out of my mind over and over again. And then we ended up actually getting that office space and then taking over the whole building over the next number of years. So I think doing things like that, as some people say, it sounds cheesy or but I think a lot of people who have got to levels that kind of exceed their own expectations seem to practice these types of things.
I just have to corroborate this, that if this was, 15 years ago, 10 years ago, I would have been laughing at that statement. You got to visualize and you got to manifest. And I would have been calling it woo-woo. But I manifested this place. I did. I'm only saying it because I really, I look back now and I don't know that you can be truly successful. I'm generalizing, so go with me. If you can't every single day see it in your head over and over and kind of like hold on to it, even when it's not there. I visualized this place at the time where we had no fucking right to be into this building. We still don't have a right to be in this building. We have no right to be taking more space in the next few weeks. We have no right, quote unquote. And yet when I listen to people over and over, when I interview people, when I see my own experiences, getting beyond yourself and just never ending. There was one last thing I want to talk about on your end, and then I want to get to like the crescendo of this. Something you said to me really resonated around building the organization, right? Like staff.
Yeah.
You're now at a point, let's go before you sold to Nedbank. You got a machine there, 350 plus people. What is the exact number? And what is your approach? Like, how did you focus on hiring, and how did who you hired change the business?
Yeah. I mean, I think an important story to share. So I think initially, and I told Mark this last week, I was at a conference in Doha where Stephen Bartlett said that entrepreneurs, initially you think that the most important thing linked to your success is how hard you work as an entrepreneur in the earlier years of your business, right? And that's exactly how I thought this. I'm going to work, I don't have more money than everyone else, but I'm going to work harder than everyone else. And I think that's true to a point, but then, there comes a realization that it's actually about the people that you hire is actually the most important thing that kind of is a predictor of future success. And there was a guy called Mark Striegel. He was the COO of SoundCloud, my first music streaming platform. German guy, very nice guy, was living in South Africa for a bit and was very kind with his time to me. He said to me, Matt, when you hire someone and you feel uncomfortable about writing that offer letter out to that person because it's either more than you're earning or it's a big number that you've never spent that much on a resource before, that is the most important and biggest step you can take for your business. And at first I was like, I don't know about this, Marcus. I like to hire people who are affordable and work hard, and expensive people, I don't know if they work that hard. But over time it resonated with me, and I did take one or two ambitious hires and brought in people who had more experience than me in certain parts of growing a business, or very deep knowledge in things that I wasn't, I didn't know. And it was really probably the most important thing that I did. And it did fundamentally help us as a business and me as a leader, I guess, progress and evolve and grow. And then that was the beginning. And then thereafter, I realized that actually, to scale a business, there's a whole bunch of things that inhibit growth. One is the size of your market. There's whether you have technology constraints, and the other is actually people and processes in your business. And there's a book by Reid Hoffman called Blitzscaling that speaks to kind of what your growth levers are and what your inhibitors are. And I realized that our biggest inhibitor was actually people. So invested behind growing really a talent function in our business, and brought in a very talented person who's now Chief Talent Officer, Steph, who ultimately, we worked on growing the team from about, I think, 60, 70 people. At the time, we had 60 people about. We would use agencies to recruit people, pay lots of money to agencies, hire people. 6 months later, they leave. The agencies got 15% of their paycheck for the year. It seemed like a really stupid model. And we built that capability internally and started to almost obsess about, on the one side, you're trying to attract customers, which is super important. What do customers want? How do we create a great experience for them? But on the other hand, how do we actually think about staff in the same way? Like where are the type of staff we want? What platforms they hang out on? From a purpose perspective, what's important to them? And craft employer brand piece that spoke to that, and also filtered out people who weren't going to be good for our culture. And we grew from probably 50, 60 people to maybe 250 people in about a year. And I spent probably 6 hours a day for that period with Steph and some of the other leaders, just recruiting people. And then also thinking of what is the right organizational design, like from a customer experience perspective, from a product perspective. How do we make these teams kind of really set them up for success? And some of the stuff we got right, some of it we didn't get right, and then we'd break the structure. And 6 months later, because the team had grown, you'd have to create new layers and try different things. And for some people, that was disruptive, but it ultimately was very successful for the business. And I think the other key thing is that we did, as much as we were hiring lots of good people, and initially it was very hard to get them to come work for us. We had to do a proper sales pitch. But as that employer brand resonated, as the brand grew, we actually started to have people who were really talented kind of knocking on the door, and it became much easier to land them, but it took a long time to get there. Another thing we did is then, at the same time, as your team's growing, whether you have 10 people or 5 people or 100 people, it's easy to turn a blind eye on the one person who is toxic to your culture, isn't pulling their weight, isn't maybe scaling into a new role. And we were, I guess, very disciplined in, through all of those stages, kind of identifying those people, either getting them to kind of become success stories in the business, or ultimately kind of, working them out of the business, and continuing to, I guess, make sure that the ethos, the core of what you had, was still that same hungry group of people aligned to kind of the culture we were trying to build. And even today, that's the case. You will constantly think about that from a performance and a culture fit perspective.
Matt, I had 2 different occasions where I sat down with you online for about an hour to an hour and a half, and I obviously got a real inside scoop, and I want to share, I guess, those 5 takeaways that really landed for me, and then give you a chance to close off. One was you spoke a lot. In fact, we spoke on ChatGPT. We spoke on Zoom or Teams so that I could pull the transcript. And I actually asked ChatGPT, like, how many times did Matt reference mental resilience? And it was a lot. It was like 30, 40 times in those two transcripts that you spoke about it. So, for me, you kind of said belief plus willingness to endure the hard parts is the universal requirement regardless of industry. I think you've spoken to that a lot. I'm going to give you a chance to come back to all of this, but I just want to sum it up. It really landed for me around staff, because you said, cool, do whatever you need to do to get product market fit. There's almost no rules at that point. You're just figuring it out.
Yeah.
But once you get to that point, it's like once you know you're on at least something, it's basically all about the people you hire, which is what you've just spoken to. You told me a lot about organizational design and scaling structure, how you of course, in the beginning again, when you're finding product market fit in the early days, but there's a point where you have to work on and you have to be super, super deliberate about design going forward. That includes, like you say, the opportunity cost. Sometimes you turn a blind eye to toxic staff. You don't always count the cost of what happens when they stay. And so, that's easy to say and hard to do, because you made a point earlier, like what happens when you have certain staff who, as the business is growing, they just knock it out the park. And then a year later, or 2 years later, when the business is far bigger, they just haven't been able to keep up, and now you have to let them go. Like, that is such a moral, ethical dilemma. But if you do, you're damned, and if you don't, you're damned. You spoke a lot about external learning. I wish we had more time to speak about that. You said the Durban ecosystem was immature, so you compensated by reading, traveling, seeking meetings with global peers. You pushed for 30-minute chats wherever you could. You spoke a lot about leader evolution, which I think it could be a whole evening on its own, because you founded the business with your team, but now you're running the business. There's clearly different skill sets that were required 14 years ago to now. But you said something that floored me, and then I want to just hand it over to you. You said ambition and suffering are linked. The bigger you want to build, the more suffering you must be prepared to endure for a really long time. Mark, choose your ambition consciously, because the trade-off is real.
Yeah, I think that's very true. Yeah, I think that's people think of, you're building a big business, and it's this quite romantic idea. And then it doesn't have to be a big business, right? It can be a restaurant, it can be a hairdresser, it can be whatever. It's all relative to different people. But I think you have to realize that whatever you're building, with that comes a level of suffering. So if you want to build a really big business, you have to be able to endure a lot of suffering, and you have to be super mentally resilient to kind of ride the ups and downs of business. And yeah, hopefully tonight, if there's one thing you take away from this, it's that our business didn't go like that. It wasn't this perfect success story, which is always, how it looks on the outside at the end. There was lots of ups and downs and pitfalls, and mental resilience, and just staying in the game and moving forward incrementally each day is the most important thing you can do. But also be aware when you're taking on something that's big, a big audacious goal. You look at like a Steve Jobs's and the Elon Musk's, and you read some of their autobiographies, and the amount of pain those people can endure to build those businesses of scale is incredible. And it's all relative. What can you take on? And that's kind of, on the flip side, your ambition has to match that.
I guess it's so interesting that if to come full circle, if you asked most youngsters in business what the goal would be, they would be like, build a big business, have lots of staff, make lots of money, exit for lots of money, be happy and live life ever after. Now, that's the classic cliche. I guess my almost last question to you is, I'm saying it tongue in cheek, is that true?
I'm not sure yet. Yeah, I think that, and I've said this to a few people, as an entrepreneur, and especially in a tech type business, it's this whole, you build a business, you get to a point, you exit the business, and that's kind of what you work towards for 14 years. You never actually think about what comes next, and what the trade-off is of releasing that responsibility, that ownership. So yeah, it's still something that I'm, digesting, and I think to go through building a business of this scale and to go through the transaction piece and the deal stuff, which is super complex, there's a lot of trauma involved with that, which takes time to process. And it's not to say that I'm super grateful for the journey we've had, but I'm also the type of person who kind of like you focusing on, well, now we need to make this a success. I haven't built the business to just exit and drop the mark, and then it becomes the legacy you've built kind of, gets eroded. I need to make sure that we manage this transition as much as we can influence it. We manage it, as gracefully and thoughtfully as possible, not just for ourselves, but for our staff, for our customers. So I think that's kind of where my head's at now. It's a whole new world, the corporate world, to kind of understand the lay of the land, and we're still very early on in that journey. So, yeah, I'm very grateful that we've got to this point, and I'm still kind of figuring out what the next part of the journey looks like.
2 last ones. What advice do you have for Mark Sham, who wants to scale this thing to 100 clubhouses around the country? I don't want to sell it, but I want to go fucking large. And not for the sake of saying I went large, because I think there's a network effect. And if I want to, if we want to build the guardian angel of small businesses, I don't know that we could do it, have the same impact. So my question is twofold. For the person who's like Mark and who wants to shoot the lights out and go, but doesn't want to sell it, I have no desire to necessarily exit. What is there, like, I know it's quite hard to isolate one piece of advice, but then what advice do you have for the other person in the audience who is not trying to be like Mark or even like Matt? They have a business, they maybe want to grow it a little bit. Maybe it's a lifestyle business, maybe not, but that's not where their head's at, the massive ambition. If you take those 2 personas or types, what do you have to say to them?
Maybe let me start with the second one. I think the people who want to just have a lifestyle business, I think that's great, because the level of suffering you have to have in your world is less. And if you're content with that and it gives you meaning and it's what you want to do, I think it's actually an awesome place to be. And it's ultimately, if we look at, our country, 40% of GDP comes from SMEs, 50% of employment comes from SMEs. Lots of positive role models and lots of communities come from small business owners. Lots of pain points for people in your communities that you're serving. So I think it's a very noble quest just to have your own thing, whatever that is, however big or small, and to serve people in a way is super meaningful. So I think keep doing what you're doing, because our country needs, we've got, depending on who you've asked, between 2.5, 3.5 million SMEs. We need those SMEs, and we need more of them to move this country in the right direction. For the Mark Sham persona, I think if you've got hair as good as yours, you've got a good start. I think there's, as we've discussed, there has to be trade-offs. So you're going to have to, if you want to build 150 venues, you're probably going to have to raise capital, and you're going to have to bring in external investors, and that will change the way that you have to run your business to an extent. So you've got to find the right partners to go on that journey with, who most importantly believe in the purpose of what you're doing. Because if there's alignments on that, and there's some emotional or morals-based connection over that piece, that's hugely important. You have to be willing to, suffer quite a lot if you want to open 150 trusts. But you can do it. I mean, if you can do one, and you can pull a crowd like this, and you can build the momentum you have with the brand you have, there's no reason why you can't do it. You just got to go for it.
Find the right people and get ready to eat shit.
Exactly, for a long time.
Matt, I want to say thank you so much for being here tonight. I mean, I think, it clearly showed there were just so many questions, but we always do try keep to our time. It would be wonderful to maybe have a part 2 a little bit down the line, when you've had more time to process, when we can look back on it more deeply. I want to give you the opportunity. I'm going to close out after this, so please don't run away. I'm aware of the time, but we're on time. I want to give you the gap to share a parting thought with everybody here and everybody watching online, but not entrepreneurs, not employees. I want to give you a chance to close off with a parting thought to all the humans, the human beings that are in this audience and online. I know I'm putting you on the spot there a little bit. What is top of mind for you that you'd like to leave them with?
Sure, that's a very loaded question. I think that when I see people who are sacrificing their evenings to come and learn and listen and be part of a community, to do their own things, to be individuals, to be authentic, to hopefully do so to make the world a better place. I think that's it's a super awesome feeling. So I think, my parting thought is really collectively as South Africans, we've got so much potential in this country. And if, we can build a movement and have platforms like this to work together to help each other grow, there's no reason why we can't get this country back to kind of where we all want it to be and where it deserves to be. So, I think my parting shot is really find the thing that you want to do, find the thing that you love, work hard at it, work with other businesses, support each other, and hopefully collectively, as that 2-3 million SME starts to really get wins on the board through kind of that shared experience, hopefully we can move this country in the right direction.
From us to you, I just want to say thank you. Thank you for giving of your time. You guys flew out from Durban here. You gave us 2 hours of your time earlier today to sit with 8 entrepreneurs. I think it'll last with them for a long time. You were willing to spend your time here. I think you have given so many people permission to have a go. I think that's what these evenings are about. They just remind you there's a real person on the other end, supported by a real team, that it was never as easy as those headlines are built to get your attention, but they almost never tell the story. And I think that we didn't even get into a tenth of some of the struggles and the hardships but I just wanted it to be said that it was clearly hard. It just shows you how you dig, and there's so many times you could walk away, but you do get to have a bit of a last laugh as a group to go, we actually did it. And it's such a lesson for why you talk about mental resilience. Thanks for not being a dick. Thanks for paying my full rate that one time I came to your office. You paid up front. You paid the full rate. It was such an interesting thing to be there that day and talk to your staff and to hear, because that was the day that really lined up for me, seeing how your staff felt about iKhokha. And people around. I remember walking around with you, Stefan, just being talking to people, and they were excited. That would be the thing I would be the most proud of. The money's cool. The exit's awesome. You got a great team there who give a shit. They love the business. I think that is I hope gives people permission to do the same. And your last point around active citizenship, I think, is so key. I want to triple down on it, that you don't have to quit your job and start a business. You don't have to start some NGO. You just have to pick something that really matters to you and just do a little something about it. Yeah. That's it. You don't have to quit your job. It's just, you just have to go this is a thing I care about, so I'm going to do something about it. And then almost always it gives other people permission to do the same. That is why I love interviewing people like you. So from us to you, thank you so much. Please, can we close off how we began with Matt? Can you please give Matt a warm round of applause?
Thank you. Thanks, guys.
Thank you, Matt.